The biggest story of the week, by far, even though it's earnings season, a lot going on, economic data coming out, all this stuff, but by far the biggest story of the week was Richard Branson flying into space. He was on a test flight from one of his spaceships owned through his company, Virgin Galactic. It's SPCE is a symbol. So it reached an altitude of 53 miles, and this was on Sunday when he took a trip, and he flew with 3 company employees, I think it was 6 people in total, before landing successfully back on Earth. So Branson became the first person to blast off in his own spaceship, beating Jeff Bezos, another billionaire, by a few days. I think he's launching next week. A little bit of egos between a few billionaires, which you see all the time. But it's really amazing stuff. I mean, going into space. It's all over every news station, everyone covering it. Doesn't matter what industry. Branson's doing interviews, said his goal was to turn the dream of space travel into a reality for my grandchildren, for your grandchildren, and for everyone. Which is what Virgin Galactic is all about, right? Space tourism. And really cool, amazing achievement, great story. Just feel good story. Now, I love a great story just like the next person. I mean, everybody does. We love to be entertained, right? So I hate throwing cold water on something that so many people are positive about. But I really need to share the story with you that nobody's telling. At least I'm not reading anyplace. And it may change your opinion on Branson. And again, this is at the height where everybody's most excited, just went to space. But it could change your opinion, especially with Virgin Galactic, since what Branson is doing to the retail investment community when it comes to Virgin Galactic, holy shit. I can't think of anybody. Swindle, sham, deception, con, pick it. Whatever you want. But man, what a joke. I'm sitting by watching. The SEC's not doing anything. Regulatory bodies aren't doing it. Nobody's doing anything to stop this. I know what you say. What are you talking about? You just went to space. It's not getting all time out. Everything's great. Look, I like Richard Branson. He's an innovator, entrepreneur. He's a disruptor. I heard great stories about the man. I hear when people are around him, they just speak to him 10 minutes, just listen to him. He's going to motivate the hell out of you. And I also know that after this successful test flight, you're not going to see a lot of negative stories written about him. He's popular, has a nice smile, he's a billionaire. Investment banks are definitely not going to say anything bad about him or the stock. I mean, these guys are foaming at the mouth since Virgin's likely going to have to raise billions and billions and billions of dollars over the next few years since they won't be generating any meaningful revenue. I didn't say earnings, right? You need revenue. You have a ton of revenue and you pay your bills and you pay your employees. They don't have revenue coming in. Meaningless revenue. So they're not generating sales or any meaningful sales anytime soon, which means they're going to have to raise a lot of money, which is why the investment banks love you, right? That's what they want. They know they're going to have to use them to raise money, so they're not going to say anything bad about it. Now, to start off here, let's take a quick walk back in time to October 2019. That's when Branson launched Virgin Galactic through a SPAC with Chamath Palihapitiya, whatever the last name is, Chamath, in 2020. In October 2019, right before 2020. And basically, they bypassed the traditional IPO. And they did it through a direct listing. And it raised $450 million, which put the valuation of the company at $2.3 billion. Pretty expensive for a company with no sales. But people love the story. Because once this thing came out, the two most high-profile billionaires in the world, Chamath and Branson, you could throw Elon in there, but not in this case. But one of the most high-profile. But Chamath and Branson, they turned up the marketing machine. So when Virgin debuted on the New York Stock Exchange, it's October 28th, Chamath, who became chairman, Branson, who's the CEO, took an amazing picture of themselves across the street from the historical building. He took it from the historical building overlooking the New York Stock Exchange with their thumbs up, going, hey, this is great, this is awesome. And across the street was a New York Stock Exchange, and it had a massive banner of Virgin Galactic on it. And I know it's from the historical building because I worked right across the street from there for 5 years when I was at the street. And you could eat lunch on the steps. It's really pretty. You can never go in a building, but I guess when you're a billionaire, you get access to everything. So he took this nice picture with them overlooking and, massive display, the whole banner across like the New York Stock Exchange, massive, right? So like with thumbs up, this is great, space, awesome, right? Then they started doing interviews all over TV, which, a lot of this is also buried in their S1 filing. So during the interviews, Virgin Galactic said, again, keep in mind, this is still October 2019, it expects commercial space flights to begin by the summer of 2020. They just got the okay. Branson just came back now. Great, you can say, well, COVID might have a little bit, whatever. That's what they said, right? That's what they sold the deal on. We're not even there yet, right? Not even there. Maybe next year, we'll see. Said already had reservations from 600 people in 60 countries, representing approximately 80 million in total collected deposits and over 120 million of potential revenue. Said all these people signed up. You probably had signed up for like $10, kind of like when you buy a Tesla car, you put 100 down and they count it as, look at all these buyers that are going to buy Tesla cars. Well, let's see if that pans out. That's no guarantee. The company also projected that by 2023, that's not too far away, it would generate $590 million in sales, an EBITDA of $274 million. The company was generating like $4 million in sales at the time, lost $173 million. This is at the time they're offering. Today, sales are lower than $4 million. $4 million. I mean, Curzio Research, our CEO, we almost do more revenue than these guys for 2020, right? So sales are lower, losses are much, much, much higher, and this is compared to 2019 when they made this claim. So then Chamath went all over CNBC, great marketer, saying that direct listings are the way to go. Benefits retail investors. I mean, look at this deal we just did. And he actually said it benefits retail investors, direct listings. I mean, what a crock of shit. You could tailor things and kind of, talk out of both sides of the mouth. We see it from politicians where they won't. This is an absolute lie to the public. It's a lie, direct listing. Direct listings are not good for individual investors. They're not. They're great for insiders like himself where they do not require the 180-day lockup period. They get to sell these things in a much shorter period, sometimes that day. Robinhood. When Robinhood goes public, they're going to be selling. Insiders are going to be selling the day it comes out on the direct listing. So you could dump shares almost immediately. And also through this structure, the SPAC and his Chamath SPAC, you can issue warrants to the SPAC and they don't have to report them. I don't know if you guys are familiar with warrants or not, but holy cow, that adds massive, massive dilution. And, corporations say, yeah, this is new money coming into the company. That's great. No, it's not great. You're diluting the hell out of people. And they're going to come in at a much lower price and they're immediately going to freaking sell it and dump the stock because they exercise the options and money, which, the warrants in the money. But they don't have to report any of this. All these side deals that they did with other investors, they don't have to report any of this crap. Anyway, after all the hype BS, everyone wanted in. Why not? I mean, it's a great story. Billionaires, rocket ships, space. You bring in Chamath, who has massive ties to Silicon Valley, major influence to young investors all over Instagram, Twitter. I mean, you can see why so many retailers are like, holy shit, I need to own this thing. This thing's great. It's awesome. Now, through 2020, the stock held steady between 20 and 30. Then the first few months of 2021, this is where things get interesting. The stock took off. Went from $35 to $55 a share, an all-time high. Once that happened, what do you think the insiders did? They used the opportunity to dump the crap out of it, including Chamath and Branson. More on this later. So after that move high, the stock started crashing and went from 58 to 17. This is mid-May. So we're only talking 2 months ago, guys. Right now, we'll catch up in time. 2 months ago. Now, when the stock was at 17, 18, 19, 20, it was crashing. Everybody knew on the inside that Virgin needed to raise cash. Since they were planning on launching in July, they don't generate any revenue. Again, you have to generate revenue. You can have massive losses, but, the revenue's coming in. That's how you pay your expenses. That's how you pay your employees. You have no revenue coming through the door. So you have to continuously raise money. And the company was burning through cash like crazy. So they knew they need to raise cash. They didn't want to do it at $17, which is kind of around the freaking IPO price now. So what did these guys do? Hey, let's turn up the marketing machine again. So in May, had a successful test flight, which started pushing shares higher. Made a big public thing about it. Then last month, the FAA gave approval for a full commercial license to operate its spacecraft with passengers. Again, another positive development, which is pushing the stock higher. Then you have a massive short position, which these guys know, and the shorts started running for cover. Now it's pushing the stock higher, even higher. Then Branson announced the date of his flight. Hey, I'm going to go. It's going to be this date, which was on Sunday. And his stock revs high. Now it's in the high 40s. And then on Sunday, Branson launched into space. Huge success. Doing interviews everywhere, telling you that commercial space flights are coming. It's exciting. It's awesome. So what? I'm British. I own a British airline by launching my first trip into space from New Mexico. It doesn't matter. This is awesome. Who cares? It's still magical. Yes, she said that, magical. So Branson is super excited, and he should be. I mean, you guys just went to space. I get it. The world is super excited. Oh, space. We're going to go to space one day, right? We're going to definitely go to space. It's $250,000 to go there. So good luck for most people. Just maximum optimism. Maximum. And then what does Branson do? At the peak of the ultra excitement period, he announces a $500 million capital raise right in investors' face. Shoves it right down their throat. So as Branson is doing all these interviews everywhere on Monday, right? Late going crazy. This is amazing. The stock is absolutely crashing. It's down 17%. Granted, last month it ran up a ton in a month. It ran up a ton. But now it's crashing because all this optimism, the perfect timing. Let's raise money at the highest possible price. Okay, good for them. Now, I took a closer look at this deal. Again, a story nobody's telling. This is awesome. I think it's awesome. I don't know if you think it's awesome. And I'm getting to a very, very big point here, important for all of you listening to this and retail investors. So, of course, the two lead underwriters, I'll give you a guess. Okay? I'll give you two. You're only going to get two guesses because you're going to get it right. Goldman and Morgan Stanley, which they're getting paid $300,000, which seems reasonable, and at least 2% commissions. So that's a quick $10 million for these guys. Quickly. Boom. Right? I can almost guarantee these guys are making a whole lot more through warrants. More on this in a second. I'm going to break that down. It's important. So I took a quick look at the filer and found a few interesting things. Again, things I'm not hearing talked about much in the media. So the offering was from Friday's closing price, and that's in S1. They had 49 in the filing for the SEC. Sorry, $49.20. That's, close to its all-time high. Highest of like 4 or 5 months. I mean, it was 17 in May. It's 49.20, right? So that's the number that they used. And Virgin has 237.3 million shares outstanding, and they're offering 10.1 million. So they say, 10.1. So they say, which equals roughly $500 million they're looking to raise. So again, I'm not going to throw a lot of numbers at you and get you confused. I want you to follow along because it's important. So the total amount of shares after the 10.1 million share capital raise, they say, is 247.4 million shares outstanding. But when you dig a little further, in the fine print, it says the share count doesn't include, guys, listen to this, 8 million shares of common stock issuable upon the exercise of a warrant outstanding as of March 31st, 2021. Okay, so March 31st, 2021, warrants, 8 million of them, with an exercise price of $11.50 per share. As of March 31st, the stock was at 30. So the 8 million shares of common stock issuable by the exercise of warrants, it's giving free money to people. Right? You're giving warrants to people when they're already, right off the bat, 8 million. But the share count doesn't include those 8 million. It also doesn't include the 5.4 million shares of common stock issuable by the exercise of options. So these are options outstanding, same date, March 31st. Again, the stock was at 30 back then. Right in the money. You're handing free money to people. I wonder why. Is that allowed? I don't know. I know Apple got into a lot of trouble early on. I forget what it was, probably 15 years ago. But Apple can't bring over the 3 leading executives from Google and give them stock at $25 a share. You're not allowed to do that because otherwise they'd have every single employee who's amazing, who's great in the entire industry working there if you're able to do that, right? And all these, you can't do that. These guys are clearly doing it. And it's right in these reports. Gets better. 4.1 million shares of restricted stock units. Again, this is outstanding as of March 31st, 2021. And then they have 7.7 million shares of common stock reserved for future issuance. For future issuance under our 2019 Incentive Award Plan. And this was as of March 31st, 2020. I don't get it. I mean, was the incentive program of 2019 never met? Because it should have been based on stock price, and your stock price went a lot higher from the IPO. So why are you giving more shares away for an incentive award plan from 2019? I mean, you're re-anting this? You're giving free? Is this a cover up to give more shares to whoever, which we don't know? Right? Common stock, 7.7. So no lockup. No lockup on these either. There's no lockup. So imagine that. I'm able to get 8 million shares, 8 million warrants whatever I did for the company to get the 8 million warrants. I don't know who got them, but 8 million warrants. And say my stock's trading at 10 and you get to exercise it at $2. And right off the bat, what are you going to do? You're going to exercise them right away. You make money, but what you're doing is diluting the shit out of existing shareholders. Anyway, when you add all those shares I just mentioned, most of them are going to be sold almost immediately because they're in the money. That's another 25 million additional shares. That's another 10% plus dilution. You might be saying 25 million shares, what's the big deal? Well, put it another way, the 25 million shares is worth $1 billion at today's stock price. $1 billion you're giving away to who knows who for free. Welcome to the world of SPACs. I'm just getting started here. So Virgin has a lot of warrants outstanding. Do you know how many? I have absolutely no clue because they don't have to disclose it. They don't disclose warrants. They could have issued 100 million warrants with an exercise price of 30 cents. But nobody has a clue because you don't have to disclose it. And that's why the company's being sued by several law firms. Because the SEC, and this was just a couple months ago in April, said some SPACs may not have properly accounted for warrants sold to investors. So in the past, many SPACs classified warrants as equity on the balance sheets. However, the SEC is now saying, quoting, that in certain circumstances, the units would have to be classified as liabilities rather than equity. So what does that mean? They're now going to have to disclose these warrants. And it's why the company pushed back their filing because they had to account for a lot of this stuff, but they still haven't reported. Nobody knows how many warrants they have. But if you notice, you're seeing the dive in SPACs because when people get a look at those warrants and the deals that they're giving certain people to raise money and through those pipe deals, holy shit, you're going to see why every single billionaire, every single large investor is doing everything they can to launch a SPAC. Because one, you're putting money into it. Two, you're able to sell it pretty much on day one. You're able to give warrants to whoever you want to raise the money. What do you care? You're in at a penny, right? You give warrants to $1, $3, $7. You're coming out at 10. You buy a company. It comes out 12, 13. You have the retail investors buying it. What do you care? Now you're going to have to disclose all this shit, all the money. And best yet for these guys is they're going to make massive, massive gains, which I'll show you in a minute, taking on no risk, and they're gone. They're out of the stock. They're gone. I mean, who doesn't want to make a $25, $50, $100 million in a couple of months with no risk? That's a pretty cool deal, I think. That's not a bad deal. I'd like to do that. Now, getting back to the offering. So this deal was announced when shares were trading over $49. Shares sold off on Monday pretty hard to $4 a share. It fell 17%. It was great because it was like 5%, 7%, 10%, and kept going lower and lower. The more interviews Branson said, and everyone's patting him on the back, this is great, and he's elated, loves it. The stock was crashing for investors. And if you look at the offering, or into this offering, insiders have been dumping shares like crazy over the past couple months. Again, even into this offering, which is why you're dumping it. You're selling it to a whole bunch of new investors at $49. Why are you dumping it? And if you look at Chemath, he dumped his personal stake for over $210 million near the peak in January, February. I think what I read, he invested around $100 million, October 2019. Again, this was his SPAC when he decided to team up with Branson. So, 210, saying he made $100 million. So a cool $100 million in less than a year. That's a pretty good deal. Good job. Good for him. Also includes Branson. Branson sold $660 million worth of stock up to last month. You know what he did just a few weeks ago? Sold another $150 million worth of stock at $25. At $25. It's $49. Now it's $40 after the offering because it crashed. But if you got Branson selling $150 million worth of $25, doesn't that tell you where he thinks the stock should be trading? I mean, if he really thought it was going this high, do you really think he'd sell at 25? And looking at insider sales, which, again, I like looking under the hood, the story nobody telling, just the past quarter. So you're looking at all the top holders. So first, Virgin Group Holdings, largest holder, sold 9% of their holdings. This is last quarter. You have Abar Space, I don't know, I guess Space Fund or whatever, who owns it, I'm not too sure, but they sold 20% of their holdings. You have Susquehanna International Group, sold 38% of their holdings. These guys own a massive amount of shares. So Virgin owns 23% of the company. Aberospace owns 5% of the company. These are massive stakes. These guys own a little bit less than 1%, who I'm going through. So Susquehanna, you have BNY Mellon selling some of their stake. Neuberger Berman, pretty big fund, selling 56% of their holdings last quarter. So everyone's selling. And these guys have an offering going all the way up, goes all the way to $49. And now look what they're doing, right? And now they're launching an offering to new investors. And the best on this is Morgan Stanley. So Morgan Stanley dumped 28% of their positions. Morgan Stanley Investment Banking and Brokerage Investments. Remember I said Morgan Stanley is one of the agents on this deal, Goldman Sachs. So these guys were selling shares to new investors to get into this deal. That's what the agent does, right? He's got the investors and they're the middlemen. They collect a fee on the deal. Yet they sold 825,000 shares themselves last quarter when the stock was in the low 30s, right? 28% of their entire position. I mean, you can't make this shit up. Morgan Stanley Institutional is selling shares, but yet they're telling their clients or other clients to actually buy it for being the agent. I mean, it doesn't get better than that. I mean, that's freaking awesome. Now, why would they do that? Is because there's some kind of warrant deal going on. Again, they don't have to disclose any of this shit. Nobody knows. Let's bring this home real quick and bring it all together. Because when you look at the fundamentals of Virgin Galactic, which I do occasionally, since I'm a research analyst, Virgin is sitting on more than $600 million in debt. Expected to lose over $300 million in 2021. Now, I'm not sure how many seats Branson is planning to have on each spaceship, but it better be a lot. I think right now it's 6. And then, you get 2 pilots. But the $120 million in pre-sales, not really going to make a dent, even if all those people do pay up. And I'm not sure if they're going to pay up more than once. You go to space, oh, that's cool. Okay, let's do it again. No, you did it. I mean, it's basically to say, hey, I did it. Look, everybody, right? That's what all the rich people love. They love the attention. They love it, right? That's why Branson going up first and doing all these interviews, and Elon Musk. You can see Jeff Bezos next week. I mean, it's all about they have enough money. It's publicity. I know these guys want to change the world, but a lot of this is for Branson's personal. I mean, personally, it's great for him. But when you look at the fundamentals on this, I mean, you have one ship, right? One ship. It costs $400 million to build a new one. Yes, I looked at the math, done the homework on this. And the next one's not coming out till 2025. So where are you going to generate money from? You going to send the ship up like 3 times a day starting next year? I don't think so. But where are you going to generate the money from? I guess more capital raises are coming. Usually when you look at space, the only way to get funding was from the government, NASA. It was the easiest way to waste tax dollars. And I won't say waste. I mean, listen, you want to explore, but you have to put billions into it and make numerous mistakes. So it's money, a lot of money gets spent. And where do you have this money? Governments, because they don't care how much they spend. They're not looking. And now you have corporate a little bit, and you're saying, okay, well, Jeff Bezos is, these guys are worth hundreds of billions. Not even the billionaires. They're worth like hundreds of billions. Some of these guys. So they build their own spaceships and stuff like that, but they still need the capital. They need the capital. And you know what? They're not going to get it from the government. So they have their private companies. They're not really going to get into the traditional IPO market. So what do? They launch in these SPACs, which is great. And you know where they get the money from? From you. From you. Listening to this, retail investors. Let's sell them a story. We'll dump the crap out of this right in their face. Maybe the stock goes up a while, giving them some nice gains, which we've been seeing. And when the wheel stops spinning, nobody's going to know shit. But this funding, this recent of $500 million, I mean, it's classic Wall Street. You look at Branson, did a great job selling this story. Chapman did a great job saying, just space is the future. The guy's out of the freaking stock in a year. Telling you how great everything is. He's out of the stock in a year. Doesn't give a shit. He's not looking at long term. He's not looking at you like space, new frontier, huge upside. I mean, eventually numbers matter. You have to make money. How is this company going to make money? They're barely generating revenue. A couple $1 million in revenue now. I mean, all those forecasts, 500 and what was it, 90 million, whatever it was, in revenue you expected 2023? Are you out of your mind? Where are you going to get that money from? You saw one ship, 6 pairs. How are you going to get that money? It's impossible. Where'd you get those numbers from? Well, we needed to sell this deal, and we need to put great projections on it, and that's what we did. And good for them, because all of them got rich. Branson, great job selling the story, making a fortune on this, even if the stock goes to zero. He already made a ton of money on this. His early backers made an absolute fortune. They got it at very, very low prices. Most, again, who are no longer in the stock, even though they told you space travel is a future. I just mentioned with Chamath. And then Branson got to be the first to go to space in a private spaceship. His name's going to be written, I guess it won't be written in encyclopedias, they don't exist anymore, but people are going to be talking that for decades and even long after he's gone. But let's talk about the average investor. What'd you get? You're buying a company that's likely never going to be profitable. Never, ever going to be profitable. I mean, I'm trying to do the math. I don't understand it. I don't know how you're going to be profitable. I mean, maybe, 20 years from now, 10 years from now, when you have 4 ships, 5 ships, maybe you bring in more competition in the market, got to lower the price. I don't know. I can't do the math. I can't figure it out how they're going to make money. So Virgin's going to have to continue to raise cash like crazy since it won't generate any meaningful revenue. Again, revenue, guys. We're not talking revenue or sales for many, many years. But how did this all work? I mean, looking back in the day, I mentioned the only stupid money chasing space was NASA taxpayer dollars through NASA. But today, the only way this works is to get a lot of stupid people, retail investors, to buy the stock up here after the offering. And then what do you have? You have Morgan Stanley, Goldman Sachs generating at least $20 million on fees just off this one deal because they got warrants on top of the $10 million in stock, right? And $300,000 in fees. They got warrants. They don't have to disclose them. What are you kidding me? Of course they did. Of course they did. If you're getting those two guys on board with just a 2% commission, yes, that average commission is usually like 5-6%. 2%, yes, you got warrants, and the fact they're exercisable on the spot, hey, that's free money. You just saw Goldman report beating estimates by how much? 50%? $5? You just saw them report this week, right? Where do you think that comes from? Look at the investment banking fees. Look across the board. The deal, especially SPACs, it's good for all these insiders involved. And almost every major insider, Virgin Galactic, what are they doing? They're dumping their shares right down your throat right now. Right down your throat. And look, I'm not telling you to short the stock here because it can go to 100 before it crashes. I have no idea. I mean, we've seen that with AMC, which makes absolutely no sense. I mean, the stock peaked when it was doing, max box office receipts at what was it, 12 million in 2018. Now they're doing, it just passed $1 billion, and the stock, its market cap is 20x what it was back then when you had record box office. It doesn't matter. You don't know where stock's going to go, where they're going to buy them, the short squeezes, nothing. It's very dangerous to short a stock in this market because who knows? I mean, you see the shorts, you see the short position, and the right story creates that short squeeze, and that thing is going to the roof. So I'm not telling you to short the stock. I mean, go to 100 before it crashes, even though Branson thinks it's not worth $25 because that's what he was selling it. But if he really loved this deal, this $500 million, and the best people do this when they raise money, they participate in the latest offering. So you have the insiders, and they participate in that latest offering. Or they write a check. Branson didn't write a check. He's selling shares. He's like, I ain't freaking buying this stock at 40, 45, 49. No way. No way. I own a ton of it. I'm selling. I'm dumping it. I already made my money on it. Now, where am I going with this? What am I trying to tell you here? You have to understand as a retail investor, Wall Street is relentless. They're relentless. They can do everything in their power to fuck the retail investor. I'm sorry to curse, but it's true. And it's not personal. That's their job. That's their job. Using people to get filthy rich. Just like they did during a credit crisis. Look at the banks where they are now. Holy cow. You're supposed to put laws in place so this doesn't happen again. Now, what did you do? You made the banks 5x times the size they were when you bailed them out? During COVID. Paying off politicians by lobbying. I mean, come on. We see this, right? But Wall Street is relentless. But the most important point here is none of this crap works without you, without the retail investor. With that last bit to sell everything to dump it to you. And today, you as a retail investor has enormous, enormous power. More power than any other time in history due to networking, social media. You could trade for free now. Zero commissions. And what is that doing? It's bringing in tens of millions of new investors. Look at Wall Street Bets, the Reddit crowd, 10 million strong now. Basically, bankrupted Melvin Capital. It was an $11 billion hedge fund that was short GameStop and wrecked them. And they're still around. They needed billions in cash infusions. Robinhood, over 30 million people strong. $11 trillion in IRAs where so many of you investing on your own and using people like me or financial newsletters to find new ideas. But the power that you have right now, I mean, it's being used by Wall Street, saying, wow, look how many people are going to be buying this stuff. They don't know. They're not going to read the stuff that I just told you. A lot of that shit's boring. I might have put a couple of you to sleep. You know, everybody says, oh, Wall Street's going to fuck you. They always do. I just wanted to go over and show you exactly how they do it. Because when Branson's out there doing interviews, watching the stock crash, they're raising money. They're not going to generate profits ever. Never, ever. I don't know where he thinks the stock is going. I mean, I hope, we see more exploration in space in it, but it's at the expense of you, the retail investors. That's why they're doing SPACs. They couldn't do it to a traditional IPO. You do direct listings so the insiders could dump on day one. There's no lockup period. Now they're liquidating again to the next SPAC and the next deal and the next deal. That's why you're seeing the same guys launch more and more SPACs. It's not like suddenly they came into another $100 million, $50 million. No, they just made $20 million, $30 million off this deal in a couple of months. I made $100 million off of this deal like Chamath did in a year. Let's start another one. Let's keep going and going and going until the wheel stops. But Wall Street right now, they're using you. And sure, some of you are making money on ESG stocks, SPACs, but Wall Street, they're capturing 95% of these gains with almost zero risk. Wouldn't it be nice if that was you? Because they know they could sell the shit they bought for $1 with warrants they don't have to disclose and sell it to people like you at 10, 11, 12 when the SPAC finally takes on the holding company, takes over somebody. Hey, these guys are going to be buying it. Okay, great. We'll just sell it to them. And for now, it's all working because those SPACs will go from 10 to 15 or in some cases 30 to 40 like in Virgin Galactic. But guys, when the wheel stops spinning, and it has for most SPACs, I mean, investors are losing a lot of money in these things. Like stuff for ESG stocks, you're looking at most of these things are down 30% plus from their highs. Wall Street, they get away scot-free, already out of these positions. They bought in the pennies, while you, the retail investor, gets left holding the bag. Now, the question is, how do you change the game? How do you become the person getting in early? How do you become that, right? That's the goal. Because that's what great investors do. It took me a long time to realize that through my career, but the deals that I get into, which open to Curzio One investors, are deals that not everybody has access to. You have to be the in crowd. Socialize with the right people. It's the way it is. But how do you recognize that power? And you do through disruption, through things like security tokens. We don't need big banks to raise money and go public. Reg A offerings, they raise that considerably, $75 million, where any investor, anyone who listens to this right now, can buy into a private company. And both of those options are going to allow retail investors to buy into companies during their super early phases of growth. Not when they IPO at $5 billion plus valuations with a forward P of 200 and the stock's up 20% on day one. It opens up 25% on day one. And you have the insiders dumping those shares as you're buying them because they're doing a direct listing and they could sell on day one. You disrupt by networking. I say it all the time in this podcast, the power of network. All the emails I get from people over 100 countries this is broadcasted to. Get emails from, of course, all industries, CEOs, hedge fund managers, small business owners, students, economists, doctors. And that's incredibly powerful to see that information in real time. That's why I encourage you, frankcurzioresearch.com, to email me. Networking through Wall Street Bets, now 10 million plus. Robinhood, 30 million plus accounts. Even crypto with Coinbase, where institutions and Wall Street still have a little understanding of the power of Bitcoin. And it's so funny because what do we say? Oh, it's a store of value. It's not a store of value. It's alternative to gold. It's not alternative to gold. It's alternative currency. It's not a currency. Back and forth with the bears. Nobody gets it. No, it's none of that shit. It's not what Bitcoin is about to the original adopters. It's communicating. Class war. Telling Wall Street, politicians, governments, we're sick of your bullshit. And it's about a revolution. And it's taking place right now.